Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to this week's Friday Fix with self Ryan, and of course the guys from AlphaPix. Usual shout out to the guys at AlphaPix. If you don't already follow, please do so on the socials, and also their Substack is brilliant, and rightly so. It's moving up in the Substack ranking, so that's awesome to see. Usual caveats, disclaimers. This is recorded live. There's no editing or whatnot, and nothing we say on this podcast is trading or investment advice. Alex, how the devil are you?
I'm good, thanks, bro. I mean, Jesse, we should know for everyone is unavailable today. So what that means is that you'll get the general intelligence level of conversation heightened for today's episode, and clear and crisp communication channels.
I do wonder,
say.
is it because he's got like a long queue in the little chef?
Yeah, he has. Yeah, no, he's on the road. That's what it is. He's on the road.
For those of you that don't know, we were pretty sure Jesse did last week's call from a road chef, a little chef, roadside trucker stop. But that's just speculation.
Yeah. As the FT reports.
Sources.
Yeah. Sources that can't be confirmed.
Right.
A few interesting bits and bobs I wanted to talk about this week. One which is obviously an ongoing one, and one that I'm not going to lie, I don't have a great feeling about, is the US and Iran.
Yeah, I feel you on that one.
Yeah, the masses of forces that are basically being shifted around almost in, like we're back to those like little boards where you start, moving your little pieces.
Yeah, with the sticks, pushing them around.
With the sticks, yeah. And obviously the gist of it is that Trump's yesterday said that he's given Iran 10 to 15 days to basically get a deal done. Obviously things, I don't know, you could say going to go either way. The bias I slightly have is he's moving all of these troops, these aircraft carriers, etc., to nearby bases. And does Trump really want to go through all of that rigmarole and then pull back? Like, knowing what I know of Donald, I don't think so.
Well, do you know what? Again, I'm with you. Like we've not seen something like this, mass movements like this, without it then something kicking off, and it is insane. There's now 2 carrier strike groups, tons of refueling aircraft gone over, tons of fighters have gone over there. I saw one specifically. Basically, nearly all of the US have got some particular type of F-16, I think it is, that basically is just made for countering air defense, and they basically sent nearly all of them over into the region. The only thing that's making me think maybe not this time, and obviously this is going to be huge egg on my face, and obviously we're going to go through it tomorrow, but Donald does love to escalate to de-escalate. Now, I agree with you. It does feel like something is going to happen, especially like the source reports that we had in Axios this week, etc. However, I think we do need to have a little bit of a caveat that it's not a given, and potentially, again, see how many caveats I'm trying to give myself here. Potentially, maybe it could be. He's putting all
that's another caveat.
Yeah, there you go. He's putting all of these kind of assets on on Iran's doorstep to kind of force through the regime to come to the table, do something, agree, whatever they're going to do. So, but yeah, it is, you're right, it is an interesting one. And, obviously the chances are considerably rising because you only need to look at WTI and Brent more so.
So that was where I was going. Yeah, obviously we've seen how this obviously ties in for financial markets. Is oil price 6-month high, and obviously the unsettlement is clearly there, and you can clearly see being evident because of this. Because if you stripped out the geopolitics and the tensions here, in my book, oil should be trading lower when on more of a classical demand supply as it stands right now.
Yeah, we had OPEC this week coming out saying basically OPEC sources suggesting that their output hikes are back on the table, and we could be pump.
Yeah, so I think this is definitely one where it is being completely fueled by what's going on in the Middle East. The interesting one whenever you're talking about Iran and oil is, let's call it hummus, but the street of hummus, which is my favorite. Obviously, 25% of maritime oil traffic goes through this tiny little strait, and technically Iran have the power to shut that off and cause
Yes.
carnage from there.
So
Go on.
on the, oh, sorry, go on. You finish your point.
No, I was just saying, but I know we've spoken about this, I think last summer when it was kind of being floated around,
Yeah.
and it really is a last resort given
Yes.
the the impact that it would have even on Iran, like shooting themselves in the foot.
Well,
Which I don't know was what you were going on to.
well, yeah, no, exactly that. And funny enough, I did put a Twitter article out a month or so ago about how Iranian headlines does not equal $100 oil, no matter what the social media people will tell you. The thing is, you need, for $100 oil, we need something major to be happening in the supply front. So we need specifically, oil infrastructure facilities, etc. In the Kargs or oil island, basically, which is where Iran sends all the oil to, and then it gets transported onto boats. We need a tax on that kind of stuff for $100 to be in play, and or obviously the Strait of Hormuz being threatened. Now, every time this has happened in the past, and every time there's been skirmishes and whatnot, there has been not a chance that they close the Strait of Hormuz. I remember last time when the US attacked the nuclear sites, there was basically the Iranian parliament indicated that they would basically vote in favor of shutting the Strait of Hormuz. That was the headline that everyone read and everyone got frothy knickers over, including some people that should know better. And I did call people out. What you need to understand is the Iranian parliament has no say or no control whatsoever about how this is done. This is all done by the regime, like the higher level regime, and also the military side of the Iranian regime. So be very careful when you hear, oh, someone's voted in favor, or the Iranians are voted in favor of closing the Strait of Hormuz. That's, the parliament. My mum's got about as much say as the Iranian parliament doing stuff like that. But the problem is, the only problem I have is any other time I'd say they're not going to do it. They're not going to close the strait. One, because literally crude oils to China is basically the only way Iran gets any money these days. If they close that down, they can't send their own oil to China. So this is why it's normally completely off the table. However, if this is the fall of the current regime, what have they got to lose? And that is my only concern, that, their backs are against the wall, and, they're like, well, fuck it. Well, we've lost Iran. We might as well fuck Iran up for the people that come after us. And this is why I do think it's slightly different this time. However, I'd be very mindful of, there's a high barrier before the strait is closed. Because the Iranian neighbours, the Saudis and everyone, the Saudis don't need it as much because they have got pipelines going off to the Red Sea and stuff. But yeah, one to watch, but do not get sucked into seeing any strike on Iran as equaling $100 oil, because if it's contained, then if we do get a $10 spike or whatever, it'd probably be a great sell. If it turns out to be a contained thing, and we only need to go again. Let's look at what happened in June, July, whenever it was, when they attacked the nuclear sites. Oil gapped up $7 or whatever it was. Everyone was calling for $100 oil. We closed down on the week.
I know. It was the price action that week was absolutely nuts. I remember that. Yeah, I do remember. I remember us talking about it. I mean, I actually, I shorted oil actually off the spike via options, and that was one of my very nice trades. And to be fair, I'd actually be in a similar position. Like if we did see something kick off and we saw a very short, 10% gap up or something, I think you can play that very nicely. And particularly,
definitely.
Yeah. Particularly on something that, because obviously the big one is that when implied volatility jumps, which would in this case, is you don't want to be exposed to that fall off, but then you can make really good use of like put spreads, for example, where you're buying one leg and selling the other, so that you're not really caught up by implied vol coming off as things settle down. But you can just take advantage of that whilst having your.
And I think that's a really good point, Alex. It's like, we're not saying, oh, if it spikes up $10 on a Monday or on a Globex Open on Sunday night or whatever, and it doesn't look like it's going to get carried away. We're not saying sell futures. Definitely not. What we're saying is, history says that the play and the thing that pays is putting on some options or something like that, and having a decent position on to make use of closing that gap.
Mm.
Of course, we've jinxed it now, and it's all going to kick off. But you can only trade based on kind of what we know in the past and how markets have reacted in the past.
Yeah.
Because half the game is risk management rather than prediction, right?
For sure. Yeah. So I think definitely that's probably a very interesting story to just keep an eye on.
Yeah.
I mean, sticking with the US slightly, the one that I don't really feel got enough coverage actually, and was what we put a note on about yesterday, was the Fed minutes on Wednesday night. I don't know if you saw those. And it was like Fed minutes normally, release whatever it is, like 3 weeks after the normal meeting. It pretty much just confirms everything that was said and nothing's that interesting.
Yeah.
But this time around, it was interesting because on this proviso. Yeah, I mean, on the proviso that everyone's been like, how many times is the Fed going to cut this year, yada, yada, yada. There was like a couple of little headlines that came out. It was like, several would have supported two-sided language on the rate path, which effectively is like, actually, we should be talking, we need hikes spoken about as well as cuts.
Yeah.
And I just don't think people really, markets weren't priced for it, and to a large extent they've kind of ignored it. But I do think that it is one where, if you have inflation and also the interesting about this, sorry to contradict myself, is that this came out ahead of the bumper employment report with the NFPs and above the sort of pretty solid inflation report that came out as well. So it's like, since the Fed have said, actually, let's hang on here because the economy might be okay, we've had, inflation showing that it's pretty sticky, a good employment report, even though you might say they're one-offs, whatever. And
but there's an increasing number of these one-offs, though, right? Isn't it like it? People like hate to admit it because Trump's in power, but the U.S. economy seems to be doing pretty good. And you could like take a step back, like you said, and say, why would they be looking to cut? And I think I completely get what you're saying. I completely agree. It's the language has gone from, or the kind of the underlying kind of trend is being like rate cut, rate cut, rate cut. And now not only are we thinking, well, look, this pause, but I'm not saying the next move is going to be a hike, but it feels like now more than ever, it feels like now more than ever, any option you can make an argument for cut, hold, or hike. Hike is a bit of a harder argument to make right now, but in a couple of months' time, it'd probably be an easier argument to make. I'm not saying that they're going to hike next. The only uncertainty, and there's a lot of uncertainty in all markets at the moment, is obviously the new Fed chair. Now, it would be, if it was all like for like and Powell was in for another couple of years or whatever, I think there's a better argument, or we'd be seeing the potential for a hike to be priced in a little bit more. But because obviously Trump's new man comes in, it would be a bit of an awkward situation if after all of this, after all of Trump saying rates are too high, get Powell out, Powell's a wanker, all this stuff. And then he puts he gone through all of the hoops and the hoopla and whatnot to get his man in. And the guy's first move is a hike. That would look very, very bad on paper.
I mean, I agree with you. Kevin Walsh. I mean, but if I was Walsh right now, I'm not going to lie, I would be getting a bit uncomfortable because, let's fast forward to May, June. And let's say we have had a couple more solid employment reports. And we've got data that's showing inflation's, it starts with a 3, let's say, headline CPI. I mean, all of a sudden, you're going to really struggle to convince the full voting members of the FOMC that actually you should be bringing rates lower.
Absolutely. Absolutely. And also, let's not forget that, and I'm a big fan of this whole story about why 2% inflation became a thing. It was a New Zealand central banker that just basically said, gun to my head, I like 2%. On an interview, on a TV interview years and years ago, and that just got that got out of hand. So this 2% target that all central banks seem to now follow, it was just a random number said by a Kiwi on an interview. So who's to say that 3% isn't ideal? There's no kind of science, there's no kind of financial kind of papers and doctorates being written on why 2% is correct. It literally just stems from some bloke giving an interview and think, oh yeah, well, we're the same for 2%. So like you said, it feels like we could potentially be only a couple of months away from the cut argument is harder to make than a hike argument. And like, you look to the Reserve Bank of Australia. They hiked a couple of weeks back, or last week, whenever it was. One thing that it's increasingly pissing me off though, is where there were many things, as you know.
I was going to say which one.
How long have you got? But one thing that's really started to piss me off, especially, and we're seeing this with the UK, like where we're so conditioned to low rates, zero rates, NERP and ZERP, that politicians as well that aren't the most educated people, unfortunately, policymakers are kind of sometimes the dumbest people in the room. But sometimes it's almost like they think that low rates or cutting rates is a sign of a growing economy. And I say this because, you see Labour MPs and like Reeves, Rachel Reeves, the UK's Chancellor of the Exchequer, tweeting about how Bank of England cutting rates is a great sign of a strengthening economy. It's like, no, that's not how it works. They cut rates because Bank of England cut rates because they're concerned about deteriorating kind of forecasts. But politicians have got it all wrapped around their tits.
It's true. I think it's definitely an evolving story. I definitely want to keep an eye on. Whilst we're on the sort of Ryan Rants channel, the one that also kind of like had me shaking my head, which is actually fresh. It was from this morning, an FT report of Nvidia, who basically, if we rewind, I can't remember exactly how far we were rhymed to. Nvidia announced $100 billion with OpenAI, a legally binding agreement, or non-legally binding, commitment of $100 billion to invest. And that then sparked off this whole bananas number race of we're going to do this and this circular supply thing.
It was. You're right. Actually, it was like the first major one, wasn't it?
Yeah, it was the first major one. So they've come out, and the FT report then is that they're investing $30 billion in OpenAI as part of their latest funding round. But quietly in the process, they've basically canned the $100 billion that they initially were saying. So they've downgraded from 100 billion to 30 as part of this funding round. But to me, this is kind of one of those where it's like, are we just going to ignore that basically like this, the song and the dance of we're going to put 100 in is now kind of like, let's just sack it off, call it 30, let's get, in the fundraising one. Because what precedent does this now set, if it's correct, obviously, should caveat, for all of these other multi-$100 billion deals that actually they can turn around and say, do you know what, guys, we're not going to do it, or why don't we flip it into a fundraising round? And the last thing I'll say on this, before I get your opinion, is that putting 30 billion, investing in OpenAI as part of a fundraising round, i.e. for equity or other incentives, is completely different to like 100 billion
investment
partnership. We're gonna direct funds to them. Like it's two different things.
Absolutely.
So what do you think?
Well, so I've been saying for a long time that it feels like letters of intent all the way down. And we've said this on multiple shows, multiple Friday fixes. And I think one thing as well, I think the writing was on the wall for this 100 billion on the Nvidia earnings call, not the one we just had, the one before, I think it was. And I remember me and you talking about this. And basically, Jensen specifically said in his kind of statement afterwards, he was talking about all this investment that Nvidia are going to be making and stuff, and he singled out the OpenAI one because it was only a couple of weeks after everyone was getting all frothy over this 100 billion claim from Sam Altman from Nvidia. And Jensen came out and said, regarding that 100 billion for OpenAI, it's caveated on a lot of targets being met along a certain number of timescales. And he basically really layered into it and kind of went, don't read it as 100 billion investment. So I think the writing was and we mentioned it on the following Friday fix. We were like, well, hang on, there you go. It's kind of the truth's coming out now. And it does feel like, I think where does the blame lie? Personally, I think it's Sam Altman knew this at the time, knew that it was like up to a potential 100 billion that wasn't guaranteed. And he's just run with it because he is a bit of a twat. but I make you right. How many of these other mega deals? Again, is it all letters of intent? And it's basically that's the top line number, but you might only complete on 30% of it.
Yeah, and I think then how much of this AI bubble you could argue that's in the stock market is sensitive to a repricing of the the size of some of
Yeah.
these deals.
Well, here's another one then. So you actually, it was when it was last summer when everyone was going gangbusters for, oh, we have 500 billion here, here's another 250 billion. And we were saying, I remember I think it might be even a time when we all met up in the Stafford, and you were saying, look, it feels like we've done a shift from any capex number is a boost for stocks to it feels like we're now like actually quality matters better than quantity. So I think there is an argument to be made that because we're not just throwing out these random numbers, the random number generator, and just pumping money into just for whatever, for chips or whatever, if we are going to be more focused, or if the capex is more focused and getting more value for money, is there an argument? I guess this is a question for you, is there an argument to be made that actually that's bullish because they're not just throwing money away anymore? It's not just like burning money for the sake of burning money because it's got AI on the end of it.
Mm. I think it does. I think also you could see like the market start to take things more seriously
Yes.
when, you know, counting letters of intent and etc. And it's almost like, you know, you don't get moves anymore based on letters of intent, whereas 6 months ago we did, and you only actually see the investors rewarding stocks and companies when it's more of a firmed up contract, or I don't know, whatever terminology you want to look at, that's basically more than a handshake or
Yeah.
a pledge, as it were.
Here's to expand on that. Here's one for you. So we've spoken in the past about potentially the worst thing that could happen to the AI sector is an IPO. Now, we mentioned this months ago that potentially this could be like the watershed moment. Like remember, it's like wildebeest on this end, the edge of the river. Who goes first for the IPO? Because if it goes badly, everyone's fucked. I know, and then I
Mm.
saw it was actually picked up by some analysts. I can't remember, or economists picked up on this as well. It was like basically like the top of the AI bubble could be on the first IPO. Now, if people are starting to take capex a bit more seriously and it's not just throwing money at the wall, does that mean that we're in a bit of a safer position for an IPO? And also, and a follow up question to that: do you still think we're going to be getting an AI IPO Q2? I don't. Well, we're not going to get one Q1 anymore.
Yeah, I mean, so definitely, I think that is imminent, yes. And as far as from the news flow I'm seeing, it's pretty much a race between Anthropic and OpenAI.
Yeah.
And like it will be one and two, because obviously you've got like Musk, who's kind of like semi rolling all of his entities
Yeah.
together with XAI, and like, I mean, yeah. So I think that one is going to be difficult to try and strip out the value of an IPO just on the AI segment. I think it's like Anthropic or OpenAI are the two like cleanest expressions. Yes, I do think. I think Q2. Yeah, I could see it. I think actually, in terms of what both of them would do if they're kind of smart, is that they'll get all the due diligence and
Yeah.
everything out of the way with the investment banks, and they'll almost get it to a position where they can pull the trigger or hold off
Yeah, that makes sense.
at any point they want.
Yeah,
So
line
do
it up and wait for
all
it.
the groundwork. And then, because if I was them, I would say sentiment is still shaky. But if we
Yeah.
can get through to the summer and have a few months of like actually people are buzzing again, then they'll pull the trigger.
Yeah.
Because yeah, I mean, if you're Sam Altman, I think it's risky to pull the trigger now.
Yeah. Well, but yeah, as Tom's just put in the live chat, there has been a lot of froth has come out of the AI kind of markets of late.
Yes.
I thought, who was it? I can't remember. Was it Goldman Sachs or someone? There's a good chart going up from them this week. Basically about the mega cap names. Are the least invested that they've been in like a decade or something like that. Microsoft is one of the most like under owned stock by hedge funds, etc., etc. So you could make the argument that there's a lot of there could be a lot of flow coming back into the mega caps, on the tech mega caps specifically, because everyone has pulled out for a little bit, which, potentially, hopefully, caveat, I am long Microsoft. But yeah, so hopefully everyone goes back into that.
Yeah. Well, I tell you what, people won't be going to as my final segue: private credit.
Oh, yeah.
Dude,
What a segue
and
that was. Sorry,
what
take
a
bow. Take
segue that
bow.
was.
That was
Thank you.
that was an elite segue.
Blue Owl Capital, which I am, for full disclosure, I have been short since over
Yes.
$4, and I think they closed today at 11 something.
Right.
Yeah, basically this story, which I'll be honest, like has been the two angles of this. This has been brewing for months now,
Yes.
and so again, full disclosure, we in our funds we were short Blue Owl. We took profit on it, arguably too early, and I'm short it since then personally. And I thought the story. Oh, sorry, I had
That's right.
a call come in. Yeah, so I thought the story had sort of finished and things were going to blow over. Haven't, and obviously the latest headline is that Blue Owl permanently restricted investors from withdrawing their cash
Yeah, not a
from
great
their
sign.
private retail debt fund, which is really really not a good headline.
Although we must
And
say that they did come out and said that was all completely false. However, there's no smoke without fire.
probably classic FT reports
Yes.
again,
Yeah,
right?
no, I think absolutely. But one thing that made me laugh, like Mohammed El Elrian, right, who used to be so respected, but recently, I don't know what he's smoking, but he's gone a bit fucking batshit crazy. He put a post out yesterday where with a screenshot of the FT article saying, "Oh, like this is the canary in the coal mine. Everything's going to fall apart. This is like what happened in 2020, 2007. Like, get a grip, right?" Firstly, it was almost like you could tell that he'd only just heard of this story because, as you said, this has been a slow burner for months. Everyone knows that it's not a great position to be in, so it's not like this came out of the blue. And and hats off to people like yourself that was like, this is not, things are definitely not right with this. In actual fact, I've got a feeling we spoke about Blue Owl early summer, maybe, or midsummer, when we were like, the problem with these things is nothing's marked to market. And if a company like this comes out and they have to start marking to market, you find, when the tide goes out, you see you swimming naked.
Yeah, well, I mean, I think it basically did. I remember like when First Brands, that was one of the big ones that kicked things up, and that was, I just had a look, that was basically like mid-September. So yeah, it's, I don't know, 5 months ago now, even more.
Yeah.
So it has on for a while, and as you said, there's been, because Jamie Dimon said there's cockroach. That was the other one.
That was it. Yes. Where there's one
Which first sort
cockroach,
of
there's
sparked it.
yeah.
Yeah, so the cockroaches, canaries, all sorts of animal connotations here. But I do think that it's one where, because the other one was slightly taking a tangent here as well. I saw an advert on X yesterday from Robin Hood, who are basically, they've just launched, and I stand to be correct on this, I think it's an ETF of private equity names, including like Revolut, Stripe, a few of the big ones on there. And it's kind of, and they're like, oh, we're opening this up to retail investors. And it's like the same story was peddled out with private credit over the past 12 months or so. And you've seen a lot of retail investors getting private credit and getting burned. I honestly, like, for some of the private equity stuff, like, I wouldn't be surprised that goes the same way, where, a lot of institutional guys will use this new retail liquidity as exited in from their positions. So,
no, I make you 100% right there. It does feel like they're just packaging stuff up to sell to the mugs so that they then have a market to get out. It definitely, I'm 100% with you on that one, my friend.
Yeah, because I think some people think that, being able to buy in private equity is this automatic golden goose of mispriced opportunity.
Exactly.
But,
it's not.
Like a Revolut or a Stripe, like from their latest funding rounds, like, you're not picking it up, cents on the dollar. For
I think, and this is it, the way they're marketing it is, and it is good marketing. They're kind of saying, look, for once you get access to kind of prices and get access to companies that until now has only been able to be like investment banks only. And, this is your chance to compete. No, it's not your chance to compete. Like, basically, like you say, you're there so they can get out.
Yeah. So yeah, I think definitely there's more room to run on the private credit equity side. But that is 1 p.m. Half an hour has flown by, and I have much appreciated your thoughts, wisdom, and understanding as always.
And the feeling is more than mutual, my dear friend. We do need to meet up for a couple of drinks rather than you just turning up for a martini then fucking off like you did last time. But
James Bond.
Yeah, very much so, actually, very much so. You look a bit like a Daniel Craig in you.
Thank you.
You're welcome. Alex, absolute pleasure as always. Listeners, thank you so much as always. I know I said it at the start of the show, but I really do mean it. And I'm not just saying it because I'm good friends with the guys. Their content is fucking excellent. It should be, they should be charging a hell of a lot of money for it. And even their premium stuff is cheap, and they put out a lot of free stuff as well. So please do follow them on Substack, etc., etc. But Alex, thank you so much. Listeners, hope you have a great weekend, and we'll see you all next week.
Pleasure. Thanks, guys.